Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September 23rd. Wanted to talk just a little bit about what we saw in markets last week, what we see in markets moving forward, and touch on the big sell-off that we saw this week that was caused by the Evergrande potential collapse in China. So we're going to talk about that, what's going on with that situation and where we stand currently, and where we see markets moving from here. Last week in the S&P 500, the S&P 500 itself was down 70 basis points and was the laggard out of the small and mid-cap indices. The mid-cap indices were only down 40 basis points, and the small caps were actually positive 40 basis points on the week. Now, what's important about this is knowing that we talked about this last week, that we've been kind of on a rolling correction here probably for the last couple of months if you really look at the markets as a whole. Where we were off the start of the year, value was in leadership, small caps and mid caps were outperforming large caps, which is indicative of a cyclical leadership cycle. And your more economically sensitive names leading the charge. And what's important about that is we may have very well seen the end to our rolling correction as small caps have taken back the leadership mantle, at least temporarily, from the large cap indices this week. Now, this Monday, we had a significant market event where the Dow Jones Industrial was down over 900 points at session lows on the day Monday, but finished and rallied only down 560 some odd points on Monday. And what caused this is over the weekend, and last week we kind of got the beginning signs of this, and then we got more information over the weekend about the second largest Chinese private development company called Evergrande, which has about $300 billion worth of debt outstanding. And it has come into very big question whether they're going to be able to pay that debt or if they're going to actually default. And over the weekend, it caused investors to get very scared and wondering if we were on the edge and verge of another financial crisis like we saw back from 2007 to 2009, like we saw here in the U.S. Well, as we got in and learned more and understand what's happening, there's a big interest payment of over 83 million US dollars due today, and there's another interest payment due today in yuan. And they have covered the yuan payment and have 30 days to cover this interest payment on dollar-denominated debt that they have outstanding. If they don't pay that within 30 days, then they would be in default standing. Now, as we've digested this, we have really come to the conclusion as an investment community that while this Evergrande may default and fail, it's not going to cause the same ripple effects internationally and globally to economic markets that we saw from 2007 to 2008. This is an example of one bad actor getting ahead of its skis and getting out too far and over leveraging. And it is going to have an impact on China, and it is going to negatively impact the Chinese economy as a whole, as property development is around 30% of their overall GDP. And if they're not able to continue to produce these homes and employ people to produce the homes, then it is going to have a negative impact on China. And if you look at China as a whole, over what they have been doing over the last couple of months with restrictions on video games, taking their for-profit educations and taking the profits away from them, and becoming more restrictive, China has really become very uninvestable right now, with President Xi Jinping putting in what he is putting in place as regulatory issues. And this is just the latest in a series of issues when it comes to China. So with that being said, we have this big market event on Monday where we saw a bunch of selling pressure, and as we fast forward to today on Thursday, we are now positive for the week in the markets. And every time that we see a 3 to 5% pullback from all-time highs in the equity markets, we see instant support come in and support the markets and buy the markets up. And that's what we saw again this week. This is the fourth time it's happened this year. Every time there's a slight pullback, the pullback happens and the liquidity rushes right back into the system. So we really see the end of this year, we really see the value in the cyclical oriented stocks really taking back that leadership mantle and driving us higher. Because what was important about this week is we did see those big cap tech names finally roll over as well. And they were the last piece of the puzzle to roll over for the correction to finally finish itself out and for us to move forward. So as always, if you have questions about how this impacts your individual portfolio, questions about what's going on overseas, or how we can help you in any way, feel free to give us a call. We're easy to talk to. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. Have a great rest of your week, everyone. Thanks.